This interview is disseminated on behalf of Silverco. My name is John Feneck. I'm your host today from the Feneck Commodities Report. And with me today is my podcast partner, Don Durrett from goldstockdata.com. Hey, Don.
Hey, we got a good one today. Silverco Mining. I've always liked this story. Kind of a new company, silver, going to be a silver producer. Those are always interesting stories.
Yeah, and we saw some great silver earnings coming out of some producers here over the last 48 hours. Pan American, PAAS, First Majestic had a ridiculous report, AG, ridiculous in a good way. Just year over year, quarter over quarter growth, given the higher silver price, is really going to open some eyes. And those stocks both responded today, along with some others like Core, which I know you love, CDE. So I wanted to go through a list here, Don, and usually, as you know, I go off memory for everything, but I wanted to get these prices right. So what I did is I looked at a handful of stocks that we interviewed over the last 6 months and just looked at their, 6 month peak, if you will, and what they're currently trading at. So we interviewed PTX Metals, if you remember, Greg Farron, PANXF in the States, PTX in Canada. The stock really exploded after our interview. It went from 7 cents at the interview all the way to 18. And now it's at 11 and a half, roughly 12 tops, right? I mean, a really big pullback off the top. We already talked about Silver 47 today, so I won't beleaguer that one, but the top on that was $1.
Yeah, do you have the data on Silver 47?
The date?
The data, 6 month and current?
Yeah, it's 101 was the high, $1, 1 cent. And then the current is 56 and a half. So wow. A really big pullback there. Denarius had a really good day today, but this was one that peaked out at 66 and a half and is now at 49 and a half. So still very significantly off its peak. Nevada King, we talked briefly about NKGFF, NKG in the States. That one peaked at 1969, so almost 20 cents, and now is trading at just over 13. Exelon, EXNRF in the States, EXN in Canada, peaked at 50 cents on good volume a couple of days in a row, and now is at 38. And then lastly is PGEZF, which is Stillwater. That one is PGE in Canada. That peaked at 50 cents as well and is now at 28. So, I mean, these are big haircuts. 50 to 28 is over 42%, 43%. I mean, these are huge moves in just a couple of weeks, and it rattles investors. So I just wanted to bring this up because I think a lot of these stocks still have a lot of merit.
Yeah, considering that gold's only down a little more than 10%, most of these were gold miners except for Exelon. Gold's down 10%, and a lot of these stocks are down a lot more. I think the reason why is because sentiment. I've been saying over and over again that we have one more battle to fight. We've been winning the battles, but we haven't won the war yet. And the last battle or the last event is the fear trade on Wall Street. So as long as investors are content to own the S&P 500 and the ETFs, the Qs or whatever, as long as they're content to do that, they're not going to buy mining stocks. And we're talking about lots of money. You're like $65 trillion is in the stock market. 65 trillion. There's less than 1 trillion in all the miners. And in the silver plays, it's like $250 billion. I mean, it's like little tiny little piece of the action. And so the sentiment and how I know the difference is that, I was there from 2004 to 2011 when sentiment was strong. So I know the difference. When sentiment is strong, you don't see you don't see stocks get beat up like this. And so you do see it when sentiment is weak. The other tell is you mentioned the earnings. The earnings have been really, really powerful, really, really potent.
Yep.
The one thing that I keep posting on X is the current free cash flow run rates. And we're looking at $2,000, $2,500 margins for these companies. So if you're producing 100,000 ounces, you're getting 200 million, 250 million in free cash flow. And that's kind of a small producer. So the larger producers like we saw First Majestic came out. Their current run rate is almost $1 billion, 850 million right now. And a lot of these companies are in the billions, the free cash flow. And the multiples, I mean, that's the key here. The multiples haven't really blown out yet. And the reason why they haven't blown out is because Wall Street isn't involved. We will see these multiples blow out. And so we're early. This is early innings. Sentiment's poor. The sentiment will turn as soon as the pivot occurs. And the pivot is the decoupling. So you have this decoupling where people stop buying the S&P, they leave the S&P and say, I don't want any of that. They're afraid of it. And then they're like, okay, where do I put my money? A lot of people put it into cash, but the problem with putting it into cash is we have inflation. So you're basically losing money. You can't, you're not, it's like, so that's, you got to stay ahead. And, they say that inflation's 2.5%, 3%. We know that's baloney, right? So if you put your money in cash, you're probably going to lose money. So people are going, not everyone, but a portion of that money will go, okay, where can I put it now? Okay, I'm not going to make 10% in the stock market. Where can I make 10, 15% on my money? And the miners are going to stick out. And that's when you get the pivot. And that's when the sentiment finally improves. And these stocks will all bounce. And they'll start doing well. We're going to see that. Silver 47 to lose almost 50%, 45%, sitting on 3 projects. That's kind of silly.
All in the USA.
Yeah, you go put down 45%. You're sitting on 3 projects. That's kind of silly, right? Well, a lot of these companies, it kind of silly. I mean, look at Stillwater down almost 50% as well, 45%. Both of those are down 45%. And Stillwater is sitting on one of the very few, large PGE mines, right, in safe jurisdiction. So this is more of a sentiment reaction,
right,
and a Momo reaction, right? So people are chasing the Momo up, and then the Momo comes down, and all the traders get out of the way. Traders are just trying to make money month on month, quarter on quarter. They'll just get out of the way. They'll wait for the next momentum move. And they're out of the way right now. And all that money is going to come rushing back in once silver gets like above 90. Gets above 90, gold gets back above 5,500. All that money will come rushing back.
Yeah, great analysis there, Don. So let's use Denarius, DNRSF, and DMET as a case study on charting, right? We don't have the chart up here, but I have it memorized. So basically, it double bottomed around 35 cents US, and then it made another low recently at around 39 to 40 US. And I said to my followers, like, you're not going to get this at 35 again. This will not be a triple bottom. What happens in a bull market is that you test maybe last year that bottom twice, but in a hot market like this year, you're going to make a higher low. And that's what people need to understand. Exelon, same thing. PGEZF, same chart. Like, you can see this across, from you and I looking at charts for 20 plus years each. You can see it happening, and you have to, put some bids out there at some point and just say, okay, this is where I'm going to, put my stake in the ground and just buy something.
Yeah, this is where we completely agree. I have this methodology of buying to the bottom. And so you look at the charts, for instance, Denarius at 35. I agree with you completely. We're not going to see 35 again with Denarius. The odds are low. I mean, it's always a possibility, but it's basically a 6 sigma plus event for Denarius to get to 35. So you're absolutely right. So anything sub 45, you want to buy it to the bottom, which the bottom's 35, in my opinion. Yep. You're just buying it. And so when you see a bottom, this is what I really like. When you see a bottom and it sticks out like a sore thumb, and the opposite is also true, that you see unbelievable alpha potential. So you got a bottom on one end and you got alpha potential on the other. That is the perfect setup. I was saying to, a couple of the bottoms that I saw, the first one was Avino, and Avino got sub 50 cents. I basically said, okay, this thing's not going to get much cheaper, people. We can see the bottom from here. And once you can see the bottom, you buy the heck out of it. And now it's almost at $10. The other one that was crazy that I saw bottom was Newmont. When Newmont got to $30, it was like, this thing's not going in much lower, people. This is buy this baby to the bottom. We never saw 29.0. We saw 29.70, I think. 29.75 was as low as it got. And now it's heading to 300. So that's 10x for Newmont's 10x. And it probably is going to go to 400 or 500, but it basically was basically a 10x from there. And Avino was better because it was a junior, but Newmont, the largest gold mine on the planet, was screaming, I'm a 10 bagger, people. I'm a 10 bagger. And nobody, people like me and you could see it, but no, Wall Street couldn't see it. They're completely blind because they ignore these things. Few people bought Newmont under $50, but most people didn't. And that situation exists today. It's not going to exist much longer. You're pointing out a really good thing here, that a lot of these stocks that you mentioned today are really close to their bottoms. If we are in a bull market, and I think we are. This is, I've been saying this is kind of the last opportunity. You think it's actually shorter than me. I think this thing could go all the way, until, August, September, ability to buy stocks cheap. And you're like, hey, we might not get to August. The buy cheap might be over in May, June.
I think it could be over before then, because the geopolitical risk is still out there. The U.S. is saying and doing a lot of things that is putting the country in where we're seeing protectionism globally now. And the threat the last 48 hours has been, hey, we're going to blow up Iran, or we're going to bomb Iran. It's like, whoa, just saying this stuff is like, saying and doing are two different things, right? But we've never had a backdrop like this, Don, where we've got momentum in gold, we've got momentum in silver, and now we have this geopolitical risk that is massive on a weekly basis. This isn't like, let's pass on it for 3 months and then something else comes up. It's literally every week.
What I've been trying to instill in people, but people don't, they're like, the one thing is that when you have a thesis or you have a vision of something, if people don't grasp it, they just ignore you, and it kind of goes over their head. They're like, that'll happen one day, Don, it's coming. But the one thing that I keep saying over and over again is that the reason that gold is at $5,000, the reason why gold went from $2,000 in February of 24, in first week of February, in February 24, gold was at $2,050. $2,050. It went up $3,000. It actually went up $3,500. It went to $5,600. $3,500 in 2 years. Now, why did that happen? And I know why it happened, but people don't believe me. It went up like that because our bond market is no longer stable. Our bond market is no longer what it's supposed to be, what it was. The bond market is literally, it's like shaking or falling apart. The bond market's going to break. And that's the reason why gold's going nuts, because the U.S. bond market is literally the heart and soul of the U.S. economy, because we live on debt. And so we literally have to print our prosperity. We have to print GDP. We literally, without printing $2 trillion, we're screwed. We have to print what we need. Literally, we have to print our interest. When you're printing your interest, we have a $1 trillion interest payment. We're printing it. When you're printing your interest payments, you're screwed. And so the rest of the world's going, the U.S. is screwed. And everybody's in denial. It's like, we can kick the can. We can keep printing. And I keep saying, no, get ahead of that. This is the George Soros trade of the shorting the pound. This is the Druckenmiller Soros trade shorting the pound. It is, you see it, it's coming. It's trying to get, the trade is to short the U.S. bond market. They shorted the pound and made, a lot of money. This is the trade, short the U.S. bond market. Now, how do you short it? You buy gold miners, silver miners, and wait for it. So for me,
if you remember, sorry, John.
Last comment. So you're right. There are global political issues, absolutely, but they're kind of noise, if you will. What the real heart and soul of this whole thing is that U.S. bond market just no longer being able to print what we need. And it's all going to come back to that. I actually think the reason why Trump is doing these things is because the U.S. it's like an end of empire situation, and we are just trying to do everything we possibly can to hang on. They're all acts of desperation. I mean, why are we even thinking of bombing Iran? Why? It's insanity, right? It's just, we go and take Maduro out. We want to take Greenland over. All this stuff they're all acts of desperation, clues that we're in this epic period of history that's unfolding before our eyes, and it all leads back to one thing: the bond market.
Gotcha. Okay, well, yeah, I keep telling my clients, like, you have to buy dips in equities like the ones we talked about earlier, because you're not going to get second, third, fourth chances. Like, I know your scenario is we might have 4 or 5 corrections this year, this being the first, correct? So, like, I don't know if we're that lucky. I don't know if we're getting 5. Like, I think that if you have a situation that develops here between the Middle East and the US, or Taiwan, China, or something else we can't foresee, that the table is already set. Silver has busted out above all resistance levels recently. Gold, same thing, right? Like, we're already rallying. So it wouldn't surprise me to see something like that happen, and then gold and silver right back in vogue, right? I mean, like, this is a tough week because China's been closed all week. They're a huge consumer of our sector, right? But go ahead.
Yeah, one final thing. You're talking about being late to the party. Once Hecla doubles to get about $50, and once First Majestic doubles to about $50, and that could happen really quick. But once those two stocks double, once they both get to 50, you're kind of late to the party. Those stocks are kind of gone. Well, if those two stocks are kind of gone, well, yeah, you can still make 100% on your money, but in mining stocks, 100% is nothing burger. We can make 100% in a week. But so you're right. A lot of these plays are going to disappear fairly quickly, and especially the quality miners. If those two stocks are going to double, and they could double by the end of April. Once those two stocks double, most of the other ones are going to double too. Your Agnicos are going to double, Alamos, Kinross, all those stocks are going to double. Newmont, Barrick, they're all going to double. And once they double, it's like your upside is your rug pulled there. At that point, you're basically playing, the stock market game where you're trying to get 25, 50%. And you're no longer going for the baggers anymore.
Right. Yeah. I mean, First Majestic was up at least 9% today on a great quarter. And that's in one day, right? Like, if you look at historical norms for the S&P going back to 1929, 8 or 9% a year is your average for a year of return. We got it today in First Majestic AG in one day. I mean, this is the kind of upside that you and I do this for, right? We both know, we've been talking about this for months, literally, that silver companies at a higher silver price are going to print money. And the really cool thing is that when we get to a trading range at a higher price, which is what we're in currently, a $70 to $90 range of silver, a First Majestic next quarter is going to crush it. Hecla is going to crush it. Core is going to crush it. Like, how do you not crush it? Like, your costs are like 20 to 25 buck ASICs, right? Like, it's crazy.
Yeah, I want to stop talking. We need to bring Mark on, but I want to say I wanted to say this is that I've been saying the multiples are going to blow out. And everybody's like, no, you're never going to get to those high multiples. Yes, we are. We're going to get to these very high multiples.
Well, at least two of us are confident, Don. It's depressing sometimes talking to CEOs because they're downbeat on their own sector, and it's like, guys, please look at what we're looking at with gold, silver, platinum, palladium, copper, all taking off simultaneously. The base metals, right? This portends really good things for stocks. So We'll leave it there. We're going to introduce Mark Ayranto, who is the CEO of Silverco. This is one that Don really likes and introduced us to. So thanks, Don. And Mark is going to join us here to tell us the story. Hey, Mark.
Hey, John, Don, thanks for having me. It's a real pleasure to be on the show. So greatly appreciate it.
Yeah, welcome. I think our viewers are going to really enjoy the story. Let us have it.
Will do. I'll give you the 6 or 7 minute pitch, and then we can get into some questions. It's a great story. Silverco Mining is new to the market. We trade under the symbol SICO. That's on the Venture Exchange. And you can find us at silvercomining.com on the internet. So if I miss anything here, get to the website. You can look at the presentation, look at everything, and all our contact details are there. So Silverco was formed in 2024 privately. We went public in October of 2025. So we've been, I had a look at it today. It's been a real whirlwind. We've been trading for less than 80 days, if I got my math right. So really new out of the gate. We have a very clear vision. We want to be a 10 million ounce a year producer within the next 3 years. So to even put a finer point on it, by October 2028, we aim to be a 10 million ounce a year producer. So we've got currently a great share structure. We've got about 37 million shares outstanding. Very few warrants. I think fully diluted, we're about 42 million. We're trading at about $10.50. These are Canadian dollars, somewhere in that range. And we're probably doing over $1 million of volume a day. So it's strong. We got a great shareholder base. Eric Sprott is our largest shareholder. We've got about 60% institutions and high net worth guys. I think Eric is in for 15%. Management and board are in for about 13% of that, and we've got to rounded out about 10% retail. We have just we got a really strong balance sheet. We just announced and closed on a financing. We raised $62.5 million, and that closed earlier today. In fact, we issued 5 million shares to do that, so it was less than a 15% dilution. Gives us a real healthy balance sheet. It was the first raise we did publicly, so really allowed us to institutionalize the shareholder registry. We had well over a dozen good, solid institutions coming in. Eric Sprott was the headline number on the news release at $10 million. Interestingly enough, he wasn't the largest order in the book, so it was really strong. Nice to get that behind us. We got a great team. We can talk a bit more about this later, but in addition to myself on the board, we've got Tim Sorensen, a really good capital markets guy. Greg Bush, who's a real good operator. He's operated and built 5 mines in northern Mexico, which is where our assets are at. And we got Gary Brown. Gary was recently retired CFO from Wheaton Precious Metals. So we got a great team. It's growing as we grow. We got a couple of real key assets. We have started with the Cusi Mining Complex. This is a past producer that was producing in as recently as 2023. It is in north central Mexico. It has been, we've got all the underground development, all the infrastructure. We've got a 1,200 ton per day mill. And as I mentioned, it was producing as recently as 2023. It's a very highly prospective ground. We got a great resource to start off. We're going to be putting out a restart plan here in a handful of weeks. And then we aim to put Cusi back into production the second half of this year. And then in addition to that, just a couple of weeks ago, I think it was the 20th of January, we announced the acquisition of Nuevo Silver, which is the owner of the Minera La Negra mine. It's 200 kilometers north of Mexico City. It is a current producer. It's producing at about 55% capacity. Currently, it's running about 1.3 million ounces of silver equivalent annualized. And like I said, it's about 55% capacity. We're going to bring that into Silverco. We're going to get that up to 100% capacity by the end of this year, and we'll be off to the races. So this year alone, our silver profile is going to be probably like on the heels of what Avino will do. And I think fast forward 12 months, we should have a production profile that may exceed Avino's, at least for the 2027 timeframe. So we've got a great team. We've got a couple of really good assets, very low restart capital on both of them, very near term to cash flow, And I think the real key thing here is that we're incredibly cheap. We are with the Minera La Negra acquisition. Once we issue those shares, we've got a market cap that's about $600 million, and that compares to like an Avino, which is about $2 billion today. So we're 1/3 their value. That is mainly due to the fact that we're relatively unknown, been trading less than 80 days on the market. Now that we've propped up the balance sheet and we get executing on delivery of both Cusi, the ramp up at La Negra, we'll do a 50,000 meter drill program this year between those two assets. Going to generate a lot of news, and really the main goal, in addition to being a 10 million ounce a year producer in 3 years, this year we want to become the go-to silver name in the market. So a lot of ambition. We're off to a great start. When I started marketing this publicly back in October, and I told people we want to be a 10 million ounce a year producer in 3 years, certainly a lot of eyebrows were raised and was considered pretty ambitious. Fast forward, in the next 12 months, we'll be halfway there, roughly. So we want to be the go-to name, and it's been a real whirlwind in the last 80 days of trading, and we have no intention of letting up. So that's it in a nutshell. I think we're a great story. We're undervalued. It really allows an investor to go back in time, maybe a year and a half or 2 years before everybody had a run up. And Silverco will catch up to our peers. I'm confident in that as people get to know the story. So it's a real rare opportunity in the silver space. It's enjoyed the big run up you guys have talked about.
Well, thanks, Mark. That's great. Congratulations on what you've accomplished so far, and also your level of confidence. I mean, that's nice to see. So you mentioned the ticker is SICO. We have a good Canadian and European following, but for the U.S. investor, have you applied for OTC, or what is your thought about the U.S. market?
Yeah, John, it's a great question. We have in fact applied for an OTC listing. Early March, I would expect that'll be in place, and certainly we've got some great support in the U.S. We'd like to help facilitate that a bit further. So, great question. That's definitely going to be some news here within this quarter.
That's great. That'll be pretty timely with PDAC starting March 1 through 4 there. So right after, well, hopefully mid March instead of late March, but we'll see. So the other question I had was regarding the share structure. You mentioned Eric was around 15%, the management and board of Silverco at 13%. I missed the rest. Can you break it down for us?
Yeah, then high net worth individuals, 99% of which we know personally, as well as institutions, and they're good, solid, long-term shareholder institutions, make about 60%, and then the balance, call it 10%, rounds out to retail investors. So, like I say, in this recent financing, we had north of a dozen strong institutions come in with great orders.
Okay, great. When does the acquisition that you announced January 20th close?
Yeah, another great question. We're pushing for it to close this quarter. It's still it was a binding LOI that had some conditional options on Silverco. One is completing our due diligence, getting a fairness opinion, and some of the other customary things you would see in a deal. We're well into that process now. I think you'll see a definitive agreement come out fairly quickly, and then we'll look to close that as quickly as we can. Obviously, there are some of the exchange policy rules we need to go through, and before the end of the quarter, we will close on Nuevo Silver, would be our projection. What I would say is Silverco is going to issue Nuevo Silver shareholders 16.8 million Silverco shares. So post that transaction, the current Nuevo shareholders will own 34%. The current Silverco shareholders will be 66%. And Nuevo has just closed on the transaction. So they are now the beneficiary of the current cash flows that Minera La Negra is enjoying, and that will pass through to Silverco shareholders. So it's a great silver environment, and we get to participate kind of in an indirect way until that does close.
Okay, thanks. Don, I'll turn it over to you.
So I like to speculate. I'm a speculator. I mean, I don't invest. I'm not an investor in gold and silver miner stocks. I'm a speculator. So your company is like right up my alley. You did a great job. You did a really good overview. I mean, I don't really have a lot of questions about your plan. I think your plan is pretty straightforward. You have two properties. You have two mills. You're basically going to start production, and then from there, you anticipate that you'll be able to expand those mills fairly quickly. It's not going to hold you back. You have $10 a share right now, so it's going to be pretty easy. You're not going to have to dilute into the ground to expand these mills, to drill. You're going to have free cash flow. You're probably going to be able to do a lot of it organically. So going forward to get to 10 million ounces, how much money do you think you're going to need to raise other than organically to get to 10 million in 3 years?
Yeah, it's a great question, Don, and appreciate the kind words on the overview. It is a fairly easy story to tell, so it's kind of tells itself a bit. But we're Minera La Negra is cash flowing right now with the $62 million we just raised. That allows for a couple things. That allows us to afford all the restart capital that we need for Cusi, and it also allows for accelerating any capital projects we need to get these assets fully up and running. So, Minera La Negra will be up fully running and by the end of this year and cash flowing pretty strong. I don't have any technical reports yet. As I mentioned, they're coming out, so I will be a little careful on the guidance I give, but I can say Minera La Negra, its current production is about 1.3 million ounces annualized, and it's about 55% capacity today. So you can kind of do the math. At Cusi, and it needs very little capital. I mean, one of the real synergies that the two companies bring is we had better access to capital markets, and we really have a complementary teams on the skill set. So, but that is very low capital to get it to where it needs to be at 100% throughput. And then Cusi, we'll come out with a plan here in the next couple of weeks. But we believe that with the capital that we have, we control our own destiny. We have enough funds to get Cusi up and running. As I mentioned, it was put on care and maintenance in 2023 when silver went below $21. Its last full year of production was in 2022. It did 1.4 million ounces at $23 AISC, but it only utilized the mill 62% of the time. And the key reason for that, the previous owner ramped production up to the current 1,200 tons per day in 2019. And then very unfortunately for them, hit COVID and everybody got shut down. So they fired back up, silver price was falling. They really didn't put the capital they needed into for underground development, and they never managed to get that fill the mill. So again, you can kind of do the math there in terms of production profiles. It will be cash flowing this year. It tells you how quick we can get this. We believe we can get this back into production. Cusi is also interesting. It is like almost the highest, if not the highest, to be the second highest pure play silver compared to any of our comps. It's like over 85% pure silver. It's really strong that way. It's a great concentrate. We've also uncovered this brand new zone called Miguel. This is this rhyolitic tuff. It's an epithermal system, but there were a couple claims to the south of that rhyolitic tuff that were not in the hands of the former owner. There was some litigation those claims were tied up into. That litigation is done. We've acquired the claims 100%. It's this area called San Miguel. When I was first marketing, I was arm waving that could go to 20 million ounces. In the recent resource estimate we just published in December, that area alone is already at 27 million ounces globally between M&I and I. and it's going over 50. I mean, it is a standalone. It's a great part of the deposit. It is importantly as well, Don. These things are, there's like principally four veins. They're just subvertical, and they blow out at depth. We're seeing gray or widths of like 8 meters, 12 meters, 16 meters. Very mineable, very productive, very easy to fill the mill. Great grades, again, over 250 gram silver equivalent, 90% of which is silver. And, I think there's huge exploration potential to really, really to get to your question about how do we get to 10 million ounces. I think we can get these two assets, again, I'll let you do the math, but basically halfway to our goal by this time next year. We can probably increase that by another 2 or 3 million ounces. And then we'll look to probably do one more acquisition. And we do that, we want it to be accretive on a per ounce basis, but also accretive on a share price basis. So I think we've got a real proven track record of buying and building mines. We're looking at permanent assets that don't need a lot of capital. They got low risk, near term to cash flow. That's really our aim over the next couple of years.
Okay, outstanding. So I always value companies. I might as well jump right to this. I always value them based on future silver prices. I don't care about current. I don't think it makes sense to invest year to year in mining stocks using the current silver and gold prices because it's too risky. It's too much volatility. I mean, if you're going to subject yourself to that kind of risk, you need to have big upside. So I'd focus on the future. Right now, it's getting, people are starting to agree with me. So, I'm using $175 silver. I was using 150, but I just thought 150 was too low. We were just at 120, so 150 seems a little low to me. So at 175, if you have a $28 ASIC, your margins are going to be $135. Maybe your ASIC goes a little up, maybe your margin's 130, which is it's still massive, right? So at 10 million ounces, at 135, you have 1.3 billion in free cash flow. If you put a 15 multiple on that, if you have those kind of margins, I think you'll get a multiple of 15. You have a $19 billion valuation. So even if you're off, I mean, even if you only get to 8 million ounces and your ASIC goes up a little more, you're still in the $15 billion neighborhood. And your market cap right now is 500 million US, under 500 million US after the deal closes. I mean, that's like you said early you said that you were cheap. So, I mean, I see, Avino still having about 10 bagger upside from here. And like you said, you're a lot cheaper than them. You're like twice as much. So you just started trading in October, so I didn't even look at you until like December. And when first time I looked at it, I mean, I thought it was like a gift. It was like, you got to be kidding me. I mean, and the reason why I thought it was a gift is because there are very few silver producers, period. There's like less than 15 that have a market cap over $100 million. They're rare, right? And they're rarer yet if you try to find a silver producer that's growing production, right? Then it gets super rare. Pan American isn't growing. Hecla is not growing. Coeur's not growing. First Majestic, none of these companies are growing silver production. None of them. Aya is growing production, and not until 2030. Boumadine doesn't go online until 2030. Endeavor Silver, they're a couple years down there with Pitarrilla. You're going to be adding every year. You're just like Avino. You mentioned Avino. It's a very good peer to you. Kind of the rare silver producer that's actually growing production. I always say that the best investment, find a producer that's undervalued and growing production. There's your best risk rewards. That's when I looked at yours, I thought it was a gift because you guys were so cheap. Because the market, they won't give you any value. You basically tell them what you're going to do. They're like, so we don't care. Prove it, right? Perfect examples like Silver X. They're sitting on 350 million ounces, maybe less than that. Silver equivalent, at least 200. But their exploration potential is fantastic. 350 is probably up there. I think they're going to get to 300 though. Their property. whoever buys that property and drills it out, but they're like, nobody will give them any value for it. Prove it, put it in production. Well, you're kind of similar situation. Prove it. Show us that you can put both of these mines in. So if you put both of these mines into production and you hit that 5 million number and you get 100, you're going to get $150 margins. That's 500 to 750 million in free cash flow, right? It's more free cash flow than your market cap. And then you throw a multiple on that. So you can see the leverage. The leverage goes nuts. It works great for people like me who speculate. I can speculate on you hitting, executing, doing what you're saying you're going to do, and then getting those higher silver prices. I mean, I love that. I mean, it's like this is you're like I said, you're like a gift. Now, my question to you: we look at risk. I don't see any risk as far as you building and executing, dilution. I don't see any problems there because you have so much room for error. Because I don't see silver prices going below 50. I think 50 is the absolute floor for silver here. And I think the top is like 150, 200, 250. So the risk for me really comes down to two things, which I think this is probably a really important question for you. At both mines, what kind of risk do you have in two areas? The first one is kind of local community labor union. Now, a lot of times the labor issues and the local community are entwined. So I want you to talk about both of those issues at both mines. And the second one is kind of what Vizsla experienced, kind of potential cartel risk in your area. So can you talk about both of those risk areas?
Yeah, great questions, Don. And I think you're right. I mean, our capital requirements are low. Most of the infrastructure in place, in fact, all of it. In fact, Minera La Negra is actually operating today. So the execution risk is low. The infrastructure is great. The geology is great. So, with a bit of focus and a little bit of capital, we can execute on those pretty well. And to your point, even if we have a few bumps on the road, it is mining after all. The current silver price really helps that along. So to get to your question, I will start at Minera La Negra. It's the producing asset that, we're looking to tuck in. There is certainly more of a community there. It's an asset that was started in 1970 by Peñoles and has been operating more or less continually through that period. A couple of periods it was on care and maintenance with low silver prices. That asset does have a union with it. There is a union agreement. The sellers of Minera La Negra are some well-heeled local Mexican business individuals. And they've done a really excellent job with labor relations, the community. I've been to the asset a number of times. And I would say in there, a community is really embedded in, very close to the mine and kind of commingled with the mine. That can always present a bit of a challenge, but the opportunity, of course, is it really is the local driver for employment. Our aim will be come in and inject capital into that project so we can get throughput up. We'll increase the number of jobs. It'll increase the bonuses. It will hopefully go a long way to keeping the union on side and the community. And look, I'm a big believer that there really needs to be, for any of these projects, community benefits where the project is at. Always crazy to me that somebody thinks differently and then wonders why they don't get support. So, it's a topic that you got to work at every day. I think the guys have done a great job. It was a real attraction for us. A good job they've done, and we need to keep that up. Then over at Cusi is a little bit different. There's not quite the same density of population near the mill or the portals. There's currently, there hasn't been a union there previously. It's definitely got a big mining history, and they've got this, like, it's a small community, and they got this fantastic mining museum. I mean, it'd be the envy of something in Vancouver. It's really spectacular. So it's a good mining history. but we'll have to do our job just to maintain good relations with the community. We think it's part of our any project's obligation to make sure the community, on a net basis, benefits from a project rather than loses from one. So we're really focused on that and want to make sure that whether it's Mexico or anywhere else, we're strong believers in community benefits and getting along with your neighbors. I think our risk in those areas is relatively low. But as you know, you got to work at them hard every day. So that'll be a key focus for us. Going to the second point and more, security with you mentioned Vizsla. Obviously, a really tragic situation there, and some of our employees know some of the people involved. It's really sad what's happened, and heart goes out to the whole Vizsla team and especially those in Mexico. Going to our assets, we are considering what's considered safe jurisdictions. So I'll start with Cusi. That is in Chihuahua. That's both the state and the capital city. I fly into Chihuahua from Dallas, Fort Worth. It's about an hour and a half. Chihuahua's got like 1 million people to it. It's got modern hotels. It's got this great entertainment district with all these outside patio restaurants. It's really a lot of fun. We hop into a vehicle from Chihuahua. We drive an hour and 10 to an hour and 20 minutes to right to the portal on paved roads, no security detail. It is considered very safe. At site, we do have security personnel, and it's really mostly to mind the gate. Nobody's armed, no other. It'd be no different than what you might expect in Canada or the US. And then at Minera La Negra, this is in Querétaro. It is just north of Mexico City. If you look at the risk profiles of all the states in Mexico, this state has got the lowest risk of going. And again, you go to site, it's all paved roads. It is quite safe. They've had no incidents. So I think we're in really good shape in as far as that goes, but it's always been top of mind. Not only health and safety of our employees, but just security. I think in light of what's happening, not only ourselves, but everybody is reviewing that in a bit more detail. And the nice thing in Chihuahua, there's a real strong mining community. So the companies are getting together, talking and making sure that we do everything we can within our power to keep all of our employees safe, whether it's, down in the mine or transportation or otherwise. And I'm glad to say we're in quite safe jurisdictions. I'm very comfortable there. Hopefully that continues. And as I mentioned, really unfortunate what's happened with Vizsla and hearts go to all those folks.
Wow, that's a beautiful answer. Near Mexico City and also Chihuahua, I think Chihuahua is one of the better places to mine. It's got a lot of big mines in Chihuahua. It has a huge mining history. Yeah, I hear what you saying about that museum is amazing. That's probably the best place. It's a good place to put one. They have the mining history there is amazing. So, yeah, I mean, this is a great story. It's really hard for me to find red flags. These are the stories that I like. I just feel I wish I had 20 like yours. That would be fantastic. But thanks for coming on and telling the story. I think $10 is the floor for your stock, even with a correction that I'm expecting this year. I don't think you're going to go much below it. Maybe people get lucky if they see an 8 handle in your stock going forward. I think very lucky.
Great. Well, guys, really appreciate the time and the opportunity. We got a great story. Again, SICO or silvercomining.com on the internet. We're working hard to get our name out there and working hard to execute on our plan, and really appreciate the time and the support. So thanks, and we'll see you guys again soon.
Excellent.
Sounds great, Mark. Thanks a lot for coming on. So, Don, really interesting story there. Thanks for bringing it to everyone's attention. Could you give us a summary, please?
I was pretty excited throughout, and you could tell. Like I said, the first time I looked at this company, I thought it was a gift because you just don't see, you know, undervalued companies like this that often with kind of a path forward that, that looks really, really solid. I mean, we've been watching over the last, for me, I mean, years and years and years, companies try to like build a silver mine and make money, build a silver mine and grow production. It's hard. I mean, very few companies have been able to pull it off. These guys, I mean, they just started trading in October and just hit the ground running and just, unbelievable success, if you will. And it's a story that it's easy to understand. They have the deposits, they have the grade, 200 grams per ton, they have the ASIC, they have the cash. They basically have everything in place. The locations of their mines are good locations. Got a good team.
Right.
It literally checks all the boxes, and you just don't find these that often. Now, the other thing that's interesting is right now, it's really interesting. Silver got above 35 bucks and ripped to, over 100. Simultaneous to that, there's been like three projects that basically have been slowly materializing, and they're all basically coming into fruition right now. Silver Storm. Silver Storm's been, working on their project for like 3 years. They go into production first half of this year, right? So these guys go into production, right? The other one's Andean Silver. They bought a private mine. They're not going into production, I think, till 27, but they're right around the corner. And then the other one's Silver Mountain. So you got four silver prop producers that are all going into production over the next 12 months, right around there, which is amazing. And all four of them are cheap because the market won't give them value. The market's like, show me. I mean, just look at the valuations of these miners. All four of the ones that I mentioned, they're all uber cheap versus their free cash flow potential, which is what I look at. Yeah, all four of them, I'm like, this is kind of amazing to me that you can buy all these stocks right now cheap. I think 6, 12 months from now, all four of these stocks will no longer be anywhere close to their current market caps. I don't believe.
Yeah. I don't know the other ones you just mentioned very well. We did interview Silver Storm. I had some reservations there a little bit. I think that you're right. I mean, these silver companies are extremely cheap. There's not a lot out of them. When you look at some of the little ones that you and I have interviewed, like Guanajuato, a producer, Silver X, a producer, like they're already producing, right? Which I like because they're able to like Silverco, execute in this market and get paid. And we don't know what's happening in 6, 12, 18 months. So, like, I'm always like you, having some producers in my portfolio now because look at what happened with Pan American today, PAAS, First Majestic AG, CDE Core. These things are producing, they're kicking butt, the numbers are there. I mean, like you have to balance your portfolio as an investor with producers, developers,
Mhm.
and explorers, in my view. And I think this is a great place to leave it there because we're going to do our webinar next month. March 20th, you and I will do a webinar. We're going to talk about those three buckets, if you will, and how we, approach portfolio construction. We're not perfect. We make mistakes, right? But if you do it methodically and you have a process, that's what's important at the investor level. And most investors don't have any type of process and they get smoked and then they never come back. Like that's, spending a little money to attend a webinar, spending a little money to join up for your website, spending
Mhm.
money to join up for our real-time email service. One of the things, Don, that I find investors do wrong is they listen to me, you, Rick Rule, Eric Sprott, and five other guys. Like you can't do that and develop a portfolio of 300 stocks or so that you can monitor. There's just no way. I mean, you have about 165 names the last I checked. I have 65 names. Like it's a lot of work to do what we do because we're not just looking at those 230 names. We're looking at like 800 others that are, potential candidates, and trying to see if, this would be something we want to include in our portfolio, right? So
Right.
I'll leave it there, but I wanted to just mention that Silverco is going to be supporting both of our events in May. So we're doing Grand Hyatt, Washington, D.C., May 17 through 19, and also the Four Seasons, Fort Lauderdale, Florida, May 20 through 22. So thanks to Mark and the team for that. And we'll see you guys next time. Thanks so much.